Have you ever heard the phrase, all great trends start with a breakout? Well, in today's video, we're going to talk a little bit about how to spot big movements and how to actually avoid some of the false breakouts that seem to happen so often in the Forex market. Let's jump over the charts and take a look at some setups and ideas about how to actually catch some of the big breakouts that occur in the financial markets and specifically in the Forex market. Now, what I want you to think about when we are looking at breakouts is you have to understand that a vast majority of breakouts actually fail. They don't really do a whole lot. And it kind of makes sense if you think about it. I had someone sort of explain it really well on a live stream recently. They said that a big breakout is kind of like trying to break a record, right? So for example, if the record here is this price range, whatever it is, let's just say it's 1.5, right? 1.5 is the high of the currency pair, and it does not want to seem to break that. In order for this to break out and to really keep going, it needs to not only break the record of 1.5, which is the previous record according to, this idea of price action, but it needs to break it and actually make a further move. And so it is quite rare, if you think about it, for a breakout to last a significant portion past the record, if you will. So I want to talk about how to spot breakouts that matter and to try and, or ways to actually try and capitalize on breakouts and to be a part of them. Now, the first thing I will say about breakouts, like I said, most of them fail. And also a lot of them, when they do occur, they don't give you much of a chance to get involved. Let me show you an example here on USD CAD, or the dollar against the Canadian dollar. Well, this week we saw something really interesting. Actually, was this? I think this was actually last week. Anyways, whenever this candle here was, this was the 4-hour chart. And what we actually talked about, I pointed this exact scenario out on stream. Now, I didn't capture this trade. I wish I did. I'd be really happy right now, but I did not. But pointing out this little concept here, what you'll notice is that buyers were basically pushing this market up while sellers were pushing it down at the same time. What do I mean by that? Well, you can see here that we've drawn a trend line here along the bottom. And what you'll notice is that the line there going through the opens and closes of these candles show that there's a increasing demand for this market. But what gets really tricky is at the same time, sellers were progressively pushing this market down. And what you'll notice here is that you can kind of see that there is some tension building in this chart. And this, you guys, is what I want to draw your attention to when looking at breakouts. Watch for scenarios like this, where you get this tightening of the chart and a breakout becomes more and more inevitable of the market. What you'll notice is, again, not only are we showing supply still coming in and sellers pushing this market lower, but at the very same time, we're seeing buyers push this market to the upside. So all said and done, when we finally got the break on this candle here, this candle told a big story. Now what we see is that tightening, that push back and forth between the buyers and the sellers had finally found its victor, which was the buyers. And now that was very clear, not only to the buyers who pushed it up, but also to the sellers who, you have to think, if we put ourselves in the mind of a seller in this situation, if you're selling the dollar CAD and you see this candle come in, most likely you're getting stopped out. And that is sort of the nature of the market in which we get these runaway breakouts. Now, a big breakout is not just built on buying. It's actually built on shorts covering their positions. What do I mean by that? Again, what we just said here, if you think about this, if you think about the perspective of a seller in this market, they took a sell trade here and now they're seeing the market go against them. Their stop loss is right here and here and here, depending on who it was, depending on the time frame they're looking at. The point is you have a lot of sellers who have stop losses in this area. So what that tells us is that a key breakout is not just about buyers coming in. It's actually about sellers closing their positions on top of buyers coming in. What do I mean by closing their positions? Well, remember that if a seller is stopping out. What does that mean? For a seller to close their position, they have to buy, right? Because again, if you sold this market, if you shorted this market, if you wanted to get out of your position, you actually have to close it by buying back your position. Another great way of saying this is that if you had a car, right? I'll draw a really, really ugly car for you guys. So if you have a car here and you bought this car at, say, $8,000. And now you decide you want to upgrade to a different car. So you take you decide you want to sell that car, and now you'll take $6K. Well, in this case, you took a loss, but that's the only way that you're going to get your money out of this car. You have to take the loss, right? So that's exactly what we're seeing here on a market perspective. We have a situation in which sellers who were shorting this market now have to cover their positions, meaning they stop out. Stopping out means they're closing their positions, which means they're buying back their position. Does that make sense? So not only do we have buyers who are now bought the lows and now buying the breakout, we have sellers who are caught in a position and forced to close their trade, driving the price even higher. These are the scenarios that as a breakout trader you want to be in. Now, how do we distinguish between whether or not this particular instance is going to work and the next one failing, right? How do we tell which ones are going to work? And the short answer for you is that it is very difficult and nearly impossible to exactly predict when the next big breakout is going to occur and whether or not it is going to work or if it's going to fail. Many times, let's see if we can find an example. Many times you get these big breakouts that look like they're going to go higher just before falling back the other direction. So for example, I'm trying to find a good one here. Here's one, for example. Actually, this is a great one. Check this out. So you're in this market that's pushing lower, right? Markets are trending lower. And so sellers are looking at this thing and saying, okay, here is a situation where you have a level of resistance, right? Sellers are thinking, okay, if it comes back up here, then we will sell this thing and push this market down. Well, to the buyers who are looking at this, they're saying, okay, well, I'd love to buy this thing if it decides to break out of the previous level, right? We just sort of have to put ourselves in the perspective of traders at this time. And you might say, okay, well, the buyers who are looking to breakout trade, they might look to go buy this thing once it breaks outside of this. So that's what they do. They buy as it's starting to break. And again, we see the disappointment come in. The sellers basically push it back. And this ends up being what we would call a fake out. Okay. So how do we tell if this is going to be a fake out or not? Well, one thing that you can consider doing is try waiting until the candle actually closes. And again, I want you to go test whatever we talk about today, because I don't want you to just because I said it, you take it as fact. Because on YouTube, anybody can say anything. And I want to encourage you to go learn and apply these skills for yourself. Go test these concepts and try them out in your back testing, because it's really, really important. But anyways, in your back testing, maybe try looking at candles after they actually officially close, because this candle on the close now went from being during the intra candle, this looked incredibly bullish. It now turned in after the candle closed to be an incredibly strong bearish signal. So now this was not only not a good breakout, but it was actually a fake out and a huge sell signal for sellers to jump in on. So of course, there's no guaranteed way of knowing exactly which breaks are going to work and which ones are going to fail, but I want you to at least consider the idea of waiting for candles to close. And also what we pointed out here in this previous price action is looking for instances where the sellers and the buyers are sort of tightened around a particular area. This is, to me, in my view, the most interesting opportunities to be trading breakouts, as you're saying, okay, we obviously have sellers and we obviously have buyers. So maybe the way to look at this is when you're looking for a chart that's consolidating and getting really tight, and then finally waiting for a strong, decisive candle. Whether the candle goes up or down, that candle can tell you a lot. So consider that in your trading when looking at breakouts. Now, the next question of this is, now that we do sort of have an idea of looking for solid breakouts, how do we enter a breakout? Do we wait for the retest? Do we wait for the first close? What's the best way? And again, when we come back to this question, there is no simple, easy answer, but I can give you my personal opinion. My personal opinion is I am a more conservative trader and I do prefer to wait for the retest. So in this case, although it's a beautiful breakout and there would have been an excellent profit to be made if I just bought this, I wouldn't have probably taken this trade because I personally, just being honest with you guys, I would have liked to see this thing come back, retest, and give me that entry. And the reason I like that is that waiting for that conservative entry, waiting for that pullback gives me a chance to buy at, number one, a lower price, but also gives my risk management a little bit more room to run. So for example, if I was to take that trade on the retest and then it was to run up, I could put my stop underneath structure, for example, and then, from there, my reward is even more as well, right? Now, the issue with that, the obvious con is that sometimes the really good breakouts, they don't give you any chance to get involved with the trade and they just run away without you. So in that instance, that's the pro and con. There is no, when it comes to trading, it's probably important for you to know this before you get too far into your trading career. It's really, really important to understand that no matter what you do in the markets, there is always a what if that coulda, shoulda, woulda made you look better, right? In hindsight, I would have bought right here. And actually, in hindsight, I would have bought over here and held it all the way, right? But hindsight is a really destructive and not helpful tool in our trading. In our trading, what is a helpful tool is analyzing a way of doing something and testing it many, many iterations through the practice of back testing. If you don't know about back testing, I encourage you to look at some of my videos on that, and that will be a helpful topic for you. Now, I want to talk about a specific one that is happening today, and what prompted me to look at this topic in more detail. Here's the dollar yen. Taking a look at today's price action, you can see that this thing is incredibly bullish. And I've been watching this pair for a while as it's just chopped back and forth and back and forth. Another pretty good example of an instance where you see heavy levels of consolidation and not a whole lot of decisive price action to one way or the other. Again, every time price came down, you had buyers who would step up and just push this thing really just back and forth, not sending it in any clear direction. That is until the last 3 days, where not only did we see 3 solid green candles, but we broke out of that consolidation zone. My opinion, and I might be right about this, I might be wrong about this, my opinion is that the dollar yen has now flipped a script into more of a bullish territory and has room to continue higher. We've broken out of structure. That consolidation period now seems to be out of the way and now behind us. And now this is where the question comes in. Do you buy this thing now in anticipation for a continued push up? Or do you wait for a retest? And for me, watching the dollar yen, as this one is now on my watch list, I like the idea of looking for that retest. What was resistance very well could become support. So we can mark that as a green zone on our chart. And again, this is what I'm looking for. I'm looking for breaks that show a serious level of dedication to one direction like this, but then I'm actually looking for the retest to get me that better entry. Now, how might I enter this trade if I was to take a trade here? Well, here's an example. Let's say I do now want to buy the retest. I can be pretty picky with my stop loss here. I'd be probably more interested in looking for, this trend to either continue quickly or stop me out. Here's a swing trade. This is a longer term because that's a pretty significant move. But you could look at this thing from a swing trading perspective and say, hey, I think that level is going to hold. That could be a move up to the previous high. Of course, we'll see if it can do all that, but there may even be some lower time frame opportunities. For example, we'll look at the 4-hour chart once more, and you can see right here, maybe there's just a play, to the previous high here. Maybe you could say, hey, if it retests, I think that things could, do one of these. And so maybe there's some opportunity to buy that break on the retest. So a great breakout has to do with, speed and strength and breaking out of key resistance. That's part number one. But part number two for me is the entry, which is waiting for an opportunity to get involved that gives me the least possible risk relative to the most possible reward. I'm not going to lie, watching the dollar yen run away today makes me want to just buy it and just ride along with the trend. But I know from experience that buying up here is just not as worthwhile as trying to be picky and trying to wait. It's better to have no open position than wish you were not in the position you're in, right? Think about it. If I was to buy this trade and then it was to pull back to my level, I would be hurting on the pullback, right? Meanwhile, smarter Nick or waiting and patient Nick would say, well, now it's finally coming down and I can get involved for a better price and look for a nice risk to reward on this trade. So all that said and done, breakouts are tricky. They're not easy. And because the market tends to have a quite back and forth nature to it just in general, especially in the Forex market, you get these periods of time like this, where you're just seeing consolidation. When you do get the breakout, it can be very frustrating because sometimes you miss the trade. It can be frustrating because sometimes, the trade will trick you and make it look like it's a big breakout when in reality it's a fake out. But again, hopefully some of the tips that we pointed out today will be helpful to you. Before we go, I do want to remind you, hit that like button if you enjoyed these sort of videos, these technical breakdowns and ideas, as well as hit that subscribe button if you're new to the channel. It should be, an easy thing to do just to subscribe down below. And what that will do for you is it will actually start promoting more free trading content for you on YouTube. By subscribing and hitting the like button, you're letting YouTube know that you want more free trading content from myself and maybe from other traders who might be able to help you for free. So with that said, thank you very much for watching today with me. I hope you got something out of the video. And with that said, we'll see you back next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.